Are you expecting Tesla stock to double by 2029? Here's what has to happen. It's not hard to believe that Tesla will continue to grow its revenue and earnings. Investors seems to be pricing in the inevitable introduction of Tesla robotaxis, and the current valuation leaves absolutely no margin of safety, so investors need to be realistic with their expectations. Let me clarify if there was ever any doubt. Tesla stock has been a fantastic company to own in recent times. And without a doubt, Tesla has been one of the best investments in the past decade. And as of this writing, shares have gone up 2,400% since December 2013. That is a lot. Really, that is a lot to happen in 10 years. Now, this top automotive stock is now the 9th most valuable company in the world. And it has done this by spearheading the EV industry while also keeping its foot on the gas as it relates to technological innovation. And even at the current market cap of $600 to $700 billion, some investors might be hoping that Tesla stock can double in the next 5 years or so. And here's what has to happen for this lofty outcome to become a reality. Profitable growth has become a necessity. Between Q3 2018 and Q3 2023, the business was able to grow revenue from $6.8 billion to $23.4 billion, translating to an unbelievable compound annual rate of 28%. Surely this top-line metric can be credited for being a key factor driving shares higher, and over the next 5 years, there is no question that Tesla will need to continue to increase its sales, and that's not hard to believe. According to an analyst, EV units represent 16% of the total light vehicle sales globally in the first half of 2023, and some estimates call for this figure to jump to 86% by 2030, and I don't think anyone doubts that Tesla should continue to be the clear leader in the industry far into the future. And perhaps more importantly, this company will need to continue finding ways to boost its credit. Tesla generated positive net income in 2020, a trend that hasn't changed ever since. Now this contrasts widely with the unprofitable EV operations at the rival companies. And bolstering manufacturing capabilities and lowering the cost of production has helped Tesla to grow the bottom line. But still, the investors shouldn't easily assume that this business will be able to expand its margins going forward. We've seen macro headwinds like higher interest rates and inflation, as well as stiff competition, lead Tesla to implement numerous price cuts for this vehicle in 2023 and 2024. And that's why the operating margin last quarter of 7.6% was meaningfully lower than the 17.2% in the year-ago period. And while competition isn't going away anytime soon, which surely tells you that Tesla has to find some other way to increase its profit apart from cutting the prices of its vehicles, which really affects its profitability. And nonetheless, the thesis for investors to own Tesla shares likely incorporates a successful rollout of a worldwide robotaxi service. And if this ever happens, Elon Musk says margin and profitability would skyrocket, and there would be a quasi-infinite demand. And the short-term vacancies in gross margin and profitability really are pretty minor relative to the long-term picture, Elon Musk said on a Q2 call of 2023. Autonomy will make all of these numbers look silly. Now that is really true. Now that is why I still have big hopes for Tesla. And I've said in my previous videos that Tesla stock can really go up 30 to 35% at the bare minimum this year. And if autonomous becomes a reality, all these numbers will look peanuts. Now, whether autonomy will happen or not, it's still easy to believe that Tesla will post strong revenue and earnings growth even if these numbers rise at a slower clip than in the past. But the current valuation presents a major headwind getting in the way of the stock doubling in the next 5 years. Shares currently trade at more than 51% its earnings. That is a steep price to pay even for one of the world's most disruptive automotive companies. And if Tesla is successful at finally introducing its full self-driving capabilities to market, an innovative breakthrough that has been delayed multiple times, then the optionality and the upside potential is truly massive. And however, there is still a ton of uncertainty around this outcome, especially within the next 5 years. While it hasn't been a smart idea historically to bet against Elon Musk, I think the current valuation represents the enthusiasm the shareholders have towards the company. Now just imagine if anyone else was the CEO of the company. Let's say if Bill Gates was the CEO of the company, would you be betting on Tesla so much? The answer is no, even I wouldn't. And it's almost as if investors believe that robotaxis are inevitable, which is not the case. And based on its current track record of incredible returns, investors might think that Tesla shares are automatically going to double in the next 5 years, but you can never be sure. Now, this is something which is very interesting because the reason for me to invest in Tesla, to buy Tesla stock, to read about Tesla stock, there is a significant factor that attracts you towards it, which is Elon Musk, which the CEOs and founders of other companies don't necessarily have. Steve Jobs had it with Apple, but not necessarily everyone had it. So the interest and the fact that people believe that Elon Musk can achieve anything he sets his eyes to is what drives the price of the company, and it is also what makes people think that robotaxis will become a reality just because Elon Musk says so. And now coming to 2024, Tesla has already warned that this year's delivery growth may be notably lower than the growth rate achieved in 2023. And Langan is also quite circumspect about Tesla's growth prospects. And while he expects deliveries to be flat in 2024, the Wells Fargo analyst expects the company's deliveries to fall next year. And Tesla's problems are not limited to the top line growth alone, as its performance on the bottom line has also flattered, and the company's gross margin fell 15% year over year last year, while adjusted earnings per share tumbled 23% to $3.12. So how low will Tesla stock go from here? Tesla remains among the most polarizing stocks, which is well reflected in its target prices. Wall Street estimates range from a low of $85 to a high of $320. And put differently, while some experts expect the stock to be cut nearly in half, while others forecast Tesla doubling from current levels. And we haven't yet factored in Cathie of ARK Invest, who has set a base case of 2027 target price of $2,000 on Tesla, and even her bear case target price is $1,400, while the bull case target price is $2,500. And of late, though brokerages have been pruning Tesla's target price amid rising concerns over its sales growth, and that includes Goldman Sachs, which lowered Tesla's price target from $220 to $190, and the brokerage's best case scenario for Tesla stock to rise to $300, and while the worst case scenario pegs the target price between $65 to $85, which it says is 30 times the expected 2024 earnings per share. So that's it guys from here today. Thank you so much for watching. Please hit the like button.